Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Hello, everyone. Welcome to the Pro Farmer Podcast. Davis Michaelson here for you on April 14, 2025. I'm here with Brian Grady. Before we get to the conversation, please don't forget to like and subscribe so you won't miss a single weekly Pro Farmer podcast. Brian, last week was one for the books. Records were made. We saw incredible volatility, a lot of fear, a lot of panic in the market. Uncertainty, I guess maybe is the word that we're using for those. I want to talk more with the nuts and bolts with Hillary Mason here in the next segment, but take us through last week because by Friday's close, I had wheat higher. I've got corn higher. The beans look good. The Nove was up 20 3/4 on Friday by the close. Not so much on the hogs there. Well, we had a $1.60 higher in the June live cattle. Brian, take us through just a little bit of last week, how the commodities acted.
Yeah, absolutely. I'm going to start with just the general tone within the marketplace and the VIX. So the fear factor gauge, so to speak, rose to its third highest level ever. And so the general marketplace has major concerns with Trump's trade policies. Now, you mentioned it, the grain and soy markets did a great job brushing that aside and pushing to the upside, led by the corn market, but the others participated as well. So that's a positive thing. I think that whenever you can separate some of that outside noise, it's a positive. Now, will we be able to continue that in the grain markets? I think that's the big question as we move forward. But there's a lot coming at the marketplace right now. We've got all the tariff stuff, obviously. We just got done with USDA's April crops report there, and no major surprises on that front. But we did see corn stocks tighten again after 2 months of pause from USDA on that front. And now we're getting into the spring planting season. USDA's crop progress reports are out every Monday now, and so the market can gauge winter wheat conditions. Eventually, we'll get into corn and soybean conditions, but for now, it's the planting paces that USDA will report on. And so there's all that. And then South America wrapping up with the soybean harvest in Brazil. A lot of questions on the safrinha corn side of things in Brazil, and then Argentina, obviously, finishing up their growing season as well.
Brian, that's a lot to keep our hands around. And amid all of the tariff talk and all of the volatility and everything, we had the April WASDE report last week, by the way. Let's not let that slip past us. Is there anything in there that you want to mention that sort of stuck out to you?
Yeah, well, I mentioned it, but the corn ending stocks tightening up, soybean ending stocks tightened too. Both of those were a little bit more than anticipated. The wheat stocks, they did increase and a little bit more than anticipated. So, seasonally now isn't a real good time for the wheat market as we push forward through spring and then eventually into the winter wheat harvest here in the not too distant future. And so that market's going to struggle, I think, without some support from the corn and soybean market. So we'll see how they perform. But, I think the funds factored in kind of a worst case scenario from the tariff standpoint going into all this, and now that some of the dust is kind of settling, just waiting to see how everything shakes out there.
Well, and how everything shakes out will start with this upcoming week. We've got a holiday shortened week. Good Friday is at the end of this week here. What are you looking for this week, Brian?
Well, more focus on the tariffs, obviously. Congress is out, and so, it's tariffs. And what does Trump do moving forward? And that seems to be the big question mark because it's ever changing, not only day to day, seemingly, but sometimes hour to hour. And so it's difficult to keep up with all the headlines coming out on the tariffs front. But that'll be the task of the marketplace for the 4 days that we do trade this week. Long holiday weekend ahead. And so, we'll see how traders want to position themselves as they head into the holiday weekend. And that's probably the focal point as we move forward here this week.
One other thing I want to mention, we've got a cattle report coming up later this week, correct?
Absolutely. So normally the cattle on feed reports are Friday afternoons at 2 p.m. Central Time. Because of Friday's holiday and closure, the government is open actually on Friday, but the markets are closed, and so that cattle on feed report is moved up to Thursday afternoon at 2 Central Time.
Pro Farmer newsletter in just 4 days instead of 5. Do you think you can get her over the finish line, brother?
Oh, we'll get her done. It's a little bit more challenging,
Sure.
cramming 5 days into 4, but
Yep.
we'll definitely get her done.
Outstanding. Brian Grady, Pro Farmer editor. Thanks, buddy. We'll talk to you later. Stick around through this break. We'll talk with Hillary Mason on the other side.
Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
And welcome back to the Pro Farmer Podcast. Thanks for tuning in, everyone. Once again, don't forget to like and subscribe. Thanks to Brian Grady there for a great conversation on the markets. I want to talk to Hillary Mason now. Hillary, in this week's, last week's Pro Farmer newsletter, you wrote about some of the market turmoil going on, and the tariffs, of course, were a topic of conversation pretty much everywhere. Can you talk to us about, just unpack some of what was in your article and what you think is important for farmers to keep in mind here?
Sure. Yeah. So, Davis, watching the general marketplace over the past few weeks has been kind of exhausting, but also fascinating at the same time. We've watched the equity market get scorched. We've watched gold soar, the U.S. dollar plummet, and the bond market face heavy pressure. But the grain and soy complexes have held relatively steady. And so there are a host of reasonings for that. One of those being, and we talk about it at length in our newsletter, but low global corn stocks, and USDA increased exports last week. So, our domestic ending stocks are also quite snug. So those are some reasons, and also the U.S. dollar plummeting is quite helpful for commodities. So those are a few reasons why we've seen the steadiness in the grain and soy complex.
Hillary, are you telling me that there are underlying fundamentals underpinning the grain markets currently that the stocks don't enjoy?
Yes, absolutely. Yeah. And I think it's leading to maybe it's kind of a safe place to be. Despite fund managers have increased their net short position, although after USDA's WASD report last week, we saw some pretty intense short covering. So yeah, definitely some fundamental underlying support.
Well, and we've talked about grains, and we've talked about sort of the stock market itself, the equities, but the treasuries have definitely had a tale to tell as well, haven't they?
They sure have. And I think there's probably a bit more confusion that stems around the treasury market, just, with equities dropping hard and fast. And we've seen a downturn in the bond market, which is quite odd because it's a safe haven asset, similar to gold. So we watched gold, reach highs, and we watched the bond market plummet. So, it was quite perplexing across the marketplace. But I think here in the near term, it feels as though, or there are sentiments of maybe a near-term low in the bond market. So hopefully we see some stabilization going forward. So.
And how would a more stable bond market impact the markets that we care most about, the grains and the livestock markets?
Absolutely. I think just stability and just reduced uncertainty across the marketplace. I think it's going to linger nonetheless. I think we're going to see some unknowns hang around for a while, but I think just reducing that uncertainty and maybe getting back to the normal fundamentals that drive the grain and soy markets, like Mother Nature, as we inch towards we are in planting season, but as we get enter into it earnestly. So.
Yeah. You mentioned some fund positioning and things like that. I know that ahead of Trump's tariff announcement, there were a number of investors in the stock market that converted those investments straight to cash. I'm wondering if you have a sense or a prediction, maybe. I'm putting you on the spot a little bit, Hillary, first thing in the morning here. How much of that money comes back? Or does it move over to grains? What happens to that money once it comes out of those equities? Maybe I'm in my mid 60s or so, and I'm thinking about retirement. Gosh, my appetite for risk is pretty low. What does that investor do?
That's a really great question, Davis, and that's it's certainly a tough question. I think U.S. equities are always ultimately, when we see downturns, there's an opportunity, right, to increase, a long position. However, I mean, I think, your typical financial managers are probably a little leery, and they might be waiting to see if we get a bit more of an extension to the downside. But yes, I think that eventually that risk appetite certainly returns to equities, for sure.
I like the sound of that. Okay. Uncertain times. Some of us are freaking out. Some of us are not. Some of us, it's a spectrum of freak out right now. It does seem like things have cooled a little bit. We've got that 90-day pause for negotiations. People are feeling a little bit better through all of that. Especially with your grain marketings, Hillary. I don't know. Tell me if I'm wrong, but I feel like, business as usual, regardless of the freaky stuff going on, we must maintain discipline while holding on to some flexibility. We've got to keep the end in mind. Agreed?
Absolutely. It's incredibly easy to get distracted through all of this. I mean, I can speak for that. But yeah, no, we have to stay disciplined, just because anything could turn this on its head, and we don't know what that is, frankly. And so we have to ensure that we know our break evens, we know what we're putting into this crop, and we have price targets, and we're holding those tight and firm. So
well said, Hillary. That's I love that approach. I think that's a solid strategy. Thanks for tuning in, everyone. Thanks to Hillary Mason. You did a great job. Thanks to Brian Grady, and for production support from Zach Zingula. I am Davis Michelson for the Pro Farmer Podcast. Have a great day, everybody.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on ProFarmer.com and in this Friday's Pro Farmer newsletter.